Mic is tweaking. Okay, we're back. What's up, guys? Welcome back to the Asia Session stream. I hope you guys are doing great. I am doing absolutely amazing as usual. Um, Today, I ended up taking one trade, one win, and made above $1,000. I made around $1,250 per account. So above $6,000 on the day on my 550k select accounts. So you can see my smile. Definitely very happy about this. I also took a win with you guys during the trading floor this morning. So it's a great day. It's a great day. Definitely some good action today. I am pretty satisfied with the way that I approach things. And you can see, okay, the market already opened here, but was I not right again on how the next daily bar was going to close? Was I not right again? That's. I think at this point we're getting quite, back to back to back to back, perfect daily biases, literally perfect, picture perfect daily biases, and I would say sometimes it's very hard, even if I have a good framework to frame the closure of the next one, because sometimes there's news and sometimes price just does not respect the framework overall. But currently, I would say within the last, I would say since July 8th, I would say this is around the moment we started the Asia session stream. When we started the Asia session stream, it was around here, I'm pretty sure, like early June, and because I saw all those candles and I talked about them with you guys, but especially those ones. But right here, guys, since June, the candle closures and the candle predictions on the daily have been working great, amazing, I would say. So yeah, let me just log in here, my broker. All right, perfect. So let's start with the daily bias. But before we go there, I hope you guys are doing great. I hope today was a beautiful day for you guys. I think there was quite some chop this morning for around from 10 to 11. There was a lot of chop on NQ. So I hope you guys were able to catch some dubs either way. But for me, I took a trade. It ran, I would say, 35 handles below my internal low that I was targeting, and I was very happy. Actually, my brother was just behind me while I was taking the trade. He actually was there, and the biggest PNL I saw was 1,800 on the trade. I clicked on exit market, exit market, exit market, but it did not fill me at 1.8. It only filled me at 1.2. So it is what it is. You doing push-ups right now? No, I just come back. I just came back from the gym though. So I did. Currently in the gym, guys, I'm doing some, like, one of the worst splits ever. I'm just doing everything. I'm doing full body every time I'm there. If there's any gym coaches, give me a good plan, because I'm tired of the gym. I want to play. I want to play more sports. But let's talk about what I'm seeing currently on the daily chart, how I would frame the next daily candle closure. And you got to keep in mind that tomorrow we have CPI, okay? Probably the biggest news of them all. And usually when we have such a big catalyst in the middle of the week, Monday and Tuesday act as accumulation phases for then having enough fuel to see the distribution from that catalyst. So here, if I take a look at this weekly chart, Monday and Tuesday, we had exactly the right thought process. We were like, okay, this weekly candle closed bullish very aggressively. We had a weekly candle that was around 1,800 handles. We need a healthy pullback, I would say, we're not just going to push from it without pulling back within the sprint. We know that if we take a look at this weekly bar and we treat it exactly like if it was a 1 minute chart, no one here, I think, would sell the next candle, especially not without this high being taken out, okay, or without those equal highs being taken out above us. So here, for me, I am projecting that the next weekly candle has more chances of being bullish than bearish, seeing a bullish closure from it. And I still stand on it, even if we are only Tuesday night. So I want to see the next weekly candle either closing like this, okay, this would be the best case scenario, or at least or closing like this. It could close back within the range and let it get below us, but I need us to see some upside from it, especially back towards 99 and potentially even 92. Okay, that would be good. So those are the two closures that I would frame on the weekly. So now we have Monday and Tuesday being accumulation phases, okay? So if we go on the daily chart, we have Monday printing, sweeping the previous high, closing back within the range. We had an unfilled gap right below us. So then we framed that since it was Tuesday, when Monday closes, we can frame how Tuesday will close. And by having this gap right below me, seeing how we failed to close above 67, I was telling myself that there was more chances of seeing a down close candle from the next bar than an up close candle. But of course, this is just a prediction. I need to look at my opening price and a lot of the structure within the distribution of that daily bar to flip my bias or not. And then here, this is exactly what we're having. We had a bearish distribution from the next bar. We opened up higher and then ended up closing bearish on the day very aggressively. Okay, and then right here, same thing for me. So what I think will happen is price needing to go back towards that daily low at first. Okay, and once CPI will open, we will be potentially here, and CPI will be probably forming the low of the week here and be the catalyst to then create a bullish daily candle that will go and wipe out the weekly high. Okay, that's what I think will potentially happen. It would be it's not as big as you would think. 500 handles, you could have that easily in one day, especially knowing that the market is pretty much waiting for this news to drop, and is being very in accumulation mode, I would say, before that. So what I think will happen is we're probably gonna chop below that internal low, that previous day low on the Asia session / the London session. The best case scenario, Asia opens, sweeps that low, accumulates. Then we have London sweeping the Asia low, flipping back above the Asia high. 8:30 opens. We are already above the previous. We are already above the daily open, and we open up towards those highs. This is literally I would say, a classic buy day that I would want to see. I would want to see CPI just ripping above those the weekly high and those daily highs above us. That's really what I would want to see. But for like the short term, I would want to see the previous day low being taken out, especially when Tokyo opens. And within the structure currently, I would not try to long until that previous day low gets swept. That's for sure. Because if I was looking at a 1 minute bar, 1 minute structure here, I would not try to buy the next candle, especially not without seeing 47. So we will be patient within this session as usual. We have a guest at around 6:30 p.m. So let's try to win. Let's try to win, because yesterday was a break even. I would say, like, it's not a bad break even at all. It was actually a pretty decent break even. When I have poor closes, when I have things that I did not anticipate to happen and they're happening in front of me, I always prefer being stopped out to break even than taking the unnecessary loss, especially in front of 1,000 people on live. Okay, so I am of course, yesterday, if you take a look at the trade that I took and you're like, oh, in hindsight, it is so easy to say that I put my stop loss to break even too soon. Of course it is, because the trade ended up hitting the target. But this is not how I view things. I view things in a way where, okay, if I have a bad closure, then it means that price definitely has a pretty good chance of wicking me before actually going to the target. So I need to protect myself as soon as possible if I have the chance, which is exactly what I did yesterday. So not mad at myself, even if, you know, we're still doing great. You know, within the last 27 trades, I won the last 21. No, I did not win the last 21, but I won 21 trades and lost 6. So we keep track of every single trade I take here. Hopefully we'll have a very clean sheet until we take at least 50 trades. That would be my goal. What if it's a bad CPI? It could happen. If it's a bad CPI, then I would anticipate this weekly bar to be an inside bar candle. If we're not able to, like, this opening price right here is the most important level. Once we reclaim that opening price again, it's over in my opinion. If we can go back up above 50 right here, either from the CPI move or before the CPI hits, the weekly is going to close bullish, in my opinion, or at least we're going to see some upside for 1 day, 1 or 2 days. That's what I'm seeing. That's with my analysis. So let me know if you guys like the way that I read the chart. Usually it's always the same thing. For the people who join here every night, at this point you get a good grasp of how I read things, and you see also the consistency. It's not like I'm reading the chart like this one day and then I use this and it's confusing. No, it's like this. This is how I read things. This has to happen. If that doesn't happen, I'm doing that. And I'm looking at, like, let's say a concept that a lot of you are also understanding. Even if I'm bearish on this bar, when am I going to flip my bias, guys? When am I truly telling myself, all right, the likelihood of us seeing any seller stepping in is very slim. I need to look for the opposite side of the range. Can you guys let me know? If you know it, you read it again. Okay, now you're trolling me. You're trolling me, bro. You know it's a live, so you can go back. If it retraces more than 75% of the candle, exactly. You see, so if I take out my fib from the low, as for the high to the low here, if price doesn't find any sellers within that whole range and we're here, the likelihood of us swiping out the upwick is far higher. The previous daily high is far higher. But the problem with most people is that, let's say they will have the previous daily high and previous daily low being marked out, okay? And usually what people will do is that they will wait for a previous daily high or low to get swept and then look for the reaction to swing for the opposite side of the range, which is, in my opinion, probably the worst thing you can ever do, because value has been established very aggressively in new levels. So meaning that, let's say you have the previous daily high and previous daily low, I would rather trade back towards the daily low or trade back towards the daily high than waiting for a reaction of the up of those levels, because reaction plays are, in my opinion, so subjective on the timing of the entry. So let's say here, for example, if we start breaking back above 75% of that previous print, in my opinion, it's an easy long to the previous daily high. If we do open up and then we start being very aggressive to the downside, it is a pretty easy short, in my opinion, to the previous daily low. But let's say this previous daily low gets swept. Okay, the problem that I see a lot is people looking for those shifts in market structure as soon as we sweep the previous daily low to then look for the opposite side of the range. The likelihood of that happening is very, very slim, because this bar holds a lot of sellers that are going to be ready to defend their positions. Okay, the value has been established below. So here, the best thing that you can do, in my opinion, is actually to short below the previous daily low instead of longing, or not shorting immediately. But if you swept the previous daily low, and then right here you see that shift in market structure, one thing that I'll do is I will never long that market structure shift. I will predict that the next candle will be bearish and will have a bearish closure, let's say on the daily chart. So every shift in market structure will act as a fake out to trap buyers, but then creating the upwick of a candle that will end up closing bearish. You see? So I use those shifts as traps when even if we sweep the low, I treat them every time as tools to see where market participants got squeezed to then enter in the opposite side, which is a concept called covering. if you cover your position, let's say you are long here, okay, then what happens if you're here, if prices goes back down very aggressively and you know you're gonna get either stopped out or you get stopped out? If you clicked on buy, then for you to get out of the position, you need to click on sell, which is the reason why I look for those failed shifts to enter positions, because they are great squeeze levels and they're great covering areas that generate, I would say, a lot of aggression from market participants in the same side. So that's pretty much how I see it in general. So I'm bearish on the daily, I'm bullish on the weekly. I would want to see us sweeping the previous daily low during the Asia Open. I would pretty much want, the best case scenario is London forms the low of day and we see London also shifts above the Asia high. When we open during the New York session, we are already above the daily open, and at 8:30 when the news pops, I would want to see it just rip above all those highs and seeing us being in a bullish distribution on the daily and the weekly. So yeah, pretty much what I see. Can you repeat that? Come back. you know you can come back on the stream, because I'll repeat there's such a big learning curve. Of course, I have a specific way of reading things, so you can rewind it. Okay, make sure to rewind it, because if not, I'm gonna literally, it's gonna be a mentorship. I'm just gonna say it again. Is that not a long time to wait? That's on the daily. So you know, whatever happens within this range, we can still catch some good plays off of the same framework, but using a different time frame to enter on, of course. But I would say in general, on the daily, that's what I would be looking for. This is how I frame like what will happen on the higher time frame. So I would see this happening. Hopefully CPI like that, 500-point daily bar at least, bare minimum. And yeah, so yeah, you can definitely rewatch the streams for sure. What would be the target if the CPI is bad? I mean, I would never try to predict either a down close candle from the previous one closing bullish on the weekly, and I would definitely not also predict that it would be an inside bar on the weekly. So if the CPI is bad, we still have Thursday to distribute, you know, and even Friday. But usually, like, it's not. I would not give up on the longs, even if the CPI does not hit the target. We could still see that distribution happening later on the day. CPI could be the low of the week. Also, we could manipulate on the CPI instead of distributing. I would want it to be a distribution, but we could also manipulate to create the low of the week. You know, Wednesday low of week is, or high of week, when CPI hits, is not something that is rare. You know, we definitely do see that a lot on classic, you know, classic buy weeks. Yeah, so I would say like those good trades where you're already in before CPI hits, you either need to enter during the London or during the Asia, but you don't know which one is going to make the low of day, which is why it's a high risk to reward, which is why, like I said, it's high risk. There is a lot of chances of you not being able to get the timing right. But in terms of the structure, you probably know where it's going to go. But that's the hardest thing in trading, is to find the timing, the exact timing where if you enter and you put your stop loss there, price actually moves in the same moment without you being stopped. This is the hardest part. Might have to set an alarm to gamble CPI. Yo, Mexican, you gotta chill, bro. That candle could decimate everything that you have. How many cups of coffee so far? This is my third. I mean, when I have a cup of coffee in front of me and, you know, I make sure I put a lot of milk in it to dilute the coffee a little bit. But you see, like, all this analysis that I made, we could still be taken along right at Asia Open, or when I would say when Tokyo opens. The only thing is, like, it would be counter trend first, so it has to be a scalp. I cannot let it run. Number two, if the daily aligns with my hourly and it's Tokyo Open, then I can turn that scalp into a bigger picture play where I would aim for that daily low. When in reality, I cannot do that even if let's say I'll give you an example. If we close strong within that gap, I'd expect us to dig deeper and feel the entirety of that gap. Let's say we close like this, okay? That's usually something a trade that you will see me take a lot. Let's say we close bullish like that. Then I would anticipate the next candle to at least dig back towards 35 like that. Okay? I would expect us to distribute to the upside from it. But what I would say hold this trade all the way to this high? No, because it's counter trend. I'm still, in my opinion, most of the orders are sitting here, and we need to sweep that internal low before actually reversing. But when are we going to sweep that low? Is it going to be during Asia or during the London? We don't know. We like, I would say 75% of the time, those highs and lows of the previous daily candle, if we're strong or weak, are taken during the overnight session. So then it's a question of being able to align the time frames together to get the perfect entry. Milk and coffee, you gotta chill, bro. PR training. But nah, I prefer lattes, bro. I swear, because I'm very, I'd say I'm super like how can I say that, sensitive to like coffee and anything. Like you give me anything, I would be extremely sensitive on that. So the coffee, if I don't take it with milk, I'm cooked. I start shaking, you know. What time frame do you like for your entries? 1 to 5 minutes, but depending, if I'm taking a trade and I'm trying to go for a daily low, then my entry will be the hourly. If I am trying to go for a weekly high, my entry will be the 4-hour. If I am trying to go for a 15-minute high, then my entry will be a 1 minute. What's up, Joey? How are you doing, my brother? What's up? What's up? We got Joey Morgan NQ in the chat. Joey Morgan NQ. I like that. Do you think it will ever be Joey Morgan ES? Or never? Married to NQ. Michael says, literally making a double espresso right now. Michael, I don't have what it takes to do that. If I do that, bro, I probably will not sleep for 2 days. I mean, let me tell you that. Do we retrace into this hourly before going lower, like within the Asia? That's a prediction. That's a prediction, so I don't know. I would prefer waiting for us to actually dig within this gap to then take the long, predicting that we're gonna actually dig deeper within the gap instead of just trying to long back towards this unfilled, predicting that it will go back in it. Let's say on the 4-hour, I would say the 4-hour is not bad how it closed. It's, you see like the 4-hour is indicating that price has a lot of chances of seeing a bullish close from it, but the daily is closing bearish. So it's conflicting biases. This is where it gets interesting, because do you really want to sell before you hit around the 702 level or even 732? It's hard to say. Timing is the hardest thing in trading, for sure. Understanding bias for me is a question of candle behavior and yeah, basically purely candlesticks. Amos, my brother, you look chill today. Did you finally score with your girl? Okay, no. AJ. I forgot I have to read half of your comments in my head before actually saying it out loud. Oh, my days. Yeah, I am absolutely in a good vibe. I'm always in a good vibe, you already know, but oh no, last 2 days, bro. Smiling like crazy. I sip on coffee all day long, probably getting around 4 to 6 cups a day. Damn. I think I'm getting there. I went from 1 to 2 and now it's 3. I really did not want to get to the 3, but this session is forcing me to get to the 3, because if you really want the best Amos ever, I need to be on some coffee or sipping on some coffee. Amos, do you drink energy drinks? Hell no. I'm looks maxing, so you know if I drink energy drinks, I'm gonna get cooked. Moss, would you please simplify your trading model and tell us? Why does it have to be simple? Why does it have to be quick, fast? Delay your gratification, my brother. Go watch an hour-long YouTube video to get all the information. You will never see any success with the model if it takes 5 minutes for me to explain it. It's gonna be so many missing parts. User comments are crazy, bro. CBI will be as Trump as one is. Yeah, definitely. Yeah, we can hear you. Yeah, what about you? Nah, I'm just talking to the chat right now.
Shot as well. I'm gonna go to the YouTube stream.
All right, so we have a new guest with us today. Tony, if you could bring him in within the next few seconds. What's up, Afiz? How are you doing, my brother?
What's up, man? Nice to be on the program again.
Let's go. Come on, brother. You kind of look like me, bro. I'm not gonna lie.
Yeah, I know.
Guys, let me know. Let me know if he looks like my twin.
All the Canadians, I think we just look similar, bro.
I
That
guess.
works.
So can we get some W's in the chat for Afiz? He's gonna be with us every Tuesday and Thursday. Yeah, Tuesday and Thursday from 6:30 to 8:30 p.m. Afiz is also a trader that I would consider being an ICT trader. I would say.
Absolutely, yeah.
Uses
Me and
this
him
concept.
trade like super similar, honestly.
Yeah, definitely. And I remember the first stream with you, I was like, damn, I really like your approach. I like how you use SMTs and how you anticipate a candle to print and distribute. I do the exact same thing, but just with a different framework. But W's for Afiz. How are you doing today, my brother?
Good, man. This month's been a bit tough, honestly. Like, I've been trading New York mostly, and
yeah.
Yeah, I've been getting my ass handed to me a little bit in the mornings, not gonna lie.
Oh, yeah?
Oh,
Did you take any trades today?
Yeah, I took a NASDAQ long this morning. I got stopped out.
Yeah, damn. Today was kind of a brutal short day, actually.
Yeah, I was looking for the external highs, but it was just YM that ran out those highs at the open, and then we dumped all day, so.
Yeah. So you were looking for a long at around like 10 a.m. or even before that?
Yeah, actually 10:15. I was looking for a long. We had a 15-minute gap, and we formed like a sequence that would take inside. Just consolidating for the most part. Like once I got in, I kind of knew I was gonna get stopped out, to be honest, because we spent the next like 15 minutes consolidating. I'm like, oh yeah, we're printing a 30-minute gap to go lower.
All right, Afiz, can you share your screen and walk us through the exact things that you look for before you enter in a setup? I just need to get reminded because I like to know and understand exactly how everyone on Tradeify TV actually trades. Let's say Terrence, who's here with us on the Asia session, actually trades the orb.
Very nice.
Miriam also trades the orb. It trades also some bookmap. I think, yeah, Spudnik trades volume profile in like point of control value areas. Yeah, that's pretty cool. Also, Rebecca trades a completely different model off of like levels on gold. So I don't really know what her model is, and I know Celine trades ICT, and Nick Metzger actually just buy low, sell high. that's a strategy.
I mean, that's definitionally profitable. So
that's what he does. So
let me try and pull up my screen share. I know I had some difficulties last time. I have to. I'm on Google Chrome. That should work, right?
Pretty sure it will. Yeah.
Right. Are you able to see it? Or I can still just see your screen. I don't know if they have to like in the let me share.
Yeah.
Yep. The screen. Yeah, I have that going, and I'm sharing my entire screen. I'm not sure if it's popping up though. Amos, let me work with the backend quickly, and I'll try and figure this. I'll go off like mic for 1 second and try and figure it out.
Yeah, no worries. Or I think the last time also we just did the analysis on my chart. I'm pretty sure.
Yeah, I know. I remember we had some difficulties with. I think it's just something to do with my Chrome not sharing. Like, interesting. It should work though.
But it's all good. If it doesn't work, we can just make the analysis on my screen. It's not,
okay. Yeah, like me and you actually trade quite similar. So what I'll do, for example, is every day. I'll look at like a 4-hour chart and try and see where the daily candle is going to go. So like, for example, today we can actually look at the trade that was probably a much better trade to take today, which is a short. If we look at our daily chart coming into the day, we're in a gap. So obviously we're thinking, okay, we might go from the gap to the highs, right? Internal to external. Now, I'm looking for longs just based on that alone. However, I'm also going to look at the other assets in the market. That's going to be like YM and the ES. those three assets are closely correlated. So when a swing point is created on one asset, S&P, NASDAQ, or Dow, we're going to use that as a, a confluence for the other markets. So as you can see on the open, we have YM pumping up and taking out that previous day high.
Let me take a look at YM right here.
Yep.
Okay, yeah, YM pumped.
Yeah.
Okay.
So this is interesting because now we can see that YM on open is taking out those highs, right? So we have to ask ourselves what's really happening above that daily high. If YM is going to continue to expand, then the other assets should be able to, get back into sync and also take out that same high. Just because highs and lows that are asymmetrical in the market typically are broken, meaning SMTs typically break over time, which is a time when that happens. So the mistake I made today was, if you look at that, the new 4-hour candle opens at 10 a.m. Yeah, and I'm thinking, okay, well, now we can trade, off of, we have failure swings on NASDAQ towards the highs, and we can trade back towards, that current high of day. So all I need to see is like a gap in this case. So you can see play out like 9:45-ish.
So on the 15? Do I go on the 15?
On the 15-minute, yeah, because we run out the lows. YM's quite high in the range. So I'm thinking, okay, NASDAQ should be able to catch up while YM maybe retraces, right, back towards like the daily open.
Yeah.
So I'm thinking that because the daily wick size on YM is massive, right, we have this huge wick that's going to have to reverse. It's not likely to expand. So I'm thinking, okay, if you look at the 50-minute chart now with NASDAQ and the YM, this is the logic for me to kind of get long. I'm like, okay, you can see YM clearly here is retracing and NASDAQ expanding away from that low. We play out like 2 15-minute candles more, you'll be able to see exactly what I mean. Right, so we're expanding away from the low. I'm thinking, okay, we're like, this is like a consolidation. We took out the lows. We have all of those equal highs on NASDAQ. As you can see, we left a whole bunch of failure swings to the highs. Right, on the 15-minute chart, you can see it, but you can also see it on the higher time frame charts, as well as the S&P. All those assets have like highs. So we get a gap. I take the gap fill that happens, I believe it's in the 10:30 candle. So 10:30, we come into that fair value.
Yeah, right here, exactly.
Yeah,
you entered like market right here.
Yeah, and then as soon as we get, so it comes into the gap at around 10:40 actually on the 5-minute. And then you can see that 10:45 closure. I just take that closure, right? It's a CSD.
Oh, okay, yeah, right here.
Yeah, it'll be at.
And then you were targeting.
Yeah, my entry is at 10:50 a.m. actually, so you can play it out. If you wait for the 50-minute gap to get tagged, actually.
This 5-minute gap below.
It's actually at 10:50. We get the 5-minute CSD that I take. So you just gotta wait a few more candles.
Oh, okay, right here.
You can see there we go, right? So I'm seeing we.
Oh, okay, so you entered on this print right here.
Yep. Because at the time that printed, we had actually some SMT sequence forming, right?
Yeah.
Market with obviously with the Dow. Dow was trading well below that 945 low. So that's the same low that forms a low of day here on NASDAQ. And NASDAQ's very far away from that low of day. So I'm thinking, okay, this is like a strength switch in the market. This is NASDAQ catching up to break all those highs. And as you can see, I get stopped out pretty quickly. Yeah, I take that CSD and then probably one candle later, I get stopped out. Now, interestingly enough, there was a sequence that printed that I would have also taken at the exact same time, which was sell side. So if you look at the 30-minute in that case, at 10:30, and you rewind right to that 10:30, this would have been the. Let me quickly mute my microphone for notifications. Okay, so see we have a gap there. It's very, very similar logic there. So if we rewind and we look at all three assets, I know it's kind of hard to pull up multiple screens, but at this point in time, the NASDAQ trades into that 30-minute gap. The ES and the Dow both don't hit that gap, okay? So that's an SMT inside of that gap. That's what we call SMT fill. So if I was bearish, I'd be looking for the lows on NASDAQ, essentially saying, okay, so we've retraced into a fair value gap and now we're going to make a new low of day. Now, in hindsight, this made a lot of sense because if you look at your ES chart, the entirety of the range of the daily candle is all low resistance lows at the sell side. So if you zoom out and you look to the lows, there's a lot of garbage down there we need to clean up. So it would have made a lot more sense to actually position myself short. So if you look at ES here, we get that SMT fill. At 30-minute high, we diverge at.
You can enter on ES?
Yeah,
You
this
don't
is
mind?
where it's okay for me to fade equal highs and lows. So when the market is trading into gaps, those highs and lows, because they're not external highs and lows, I don't mind if they're equal or relative equal. So in this case, the minute the 3-minute candle CSD'd out of the 30-minute gap,
Right here.
right there, I would just take a market entry. A couple of my students actually did take this trade, which is a much better trade than my long, to be frank. And they would just be targeting that same low that NASDAQ took on the daily chart. It's the previous day low on ES. They're just going to target that. So that's SMT breaking at the lows. That sequence is honestly far more ideal, just because once price expands at 930, you can see it consolidates. Consolidation is a continuation signature. So because we're not getting that V shape back into the range, we're really just chopping around. It would have made a lot more sense for me to be looking for sells today. And you can see NASDAQ also delivered that same sell.
I think it was like it's so easy to say in hindsight though that it was like a better trade to take the short, because I think the longs looked definitely great where you took them, and when you saw the invalidation of the long, then the short became an incredible
that was exactly
setup, you
it.
know?
So like one of my instructors in my Discord, he actually took the exact opposite. He took the 3-minute 60 lower, and that's just sometimes how it works, right? Even when you're trading mechanical models, it's like if you don't have a draw on liquidity and a bias to get there, typically speaking, both sides of the market can be framed. So yeah, it just shows that two traders trading the same system can take simultaneous wins and losses.
Yeah. Okay, I'll ask you a question, because I remember when I traded, I remember me trading within my first 6 months.
Yep.
And I learned about SMTs and breaks of structures and inversions. And I remember when I learned about SMT, so the divergence between ES and NQ, I really thought I understood a glitch in the market where, I was gonna make money off of it. Okay?
Every time, yeah.
Yeah, and then when I started to trade it over and over again, I saw that I just kept being faked out, and there was an SMT here, an SMT there. And then in hindsight, when you take a look at the chart after the day, there's always an SMT that creates a reversal.
Yep.
But then how many of them are going to be created without seeing a full-on reversal, is going to resweep 55 times and then leave? So the question I'm going to ask you is, how do you spot a high probability SMT?
Sure.
Is it because you have is it because it slows of higher time frame candles, or is it when you see an SMT that is aligning with your higher time frame bias? So it's like
that's a really good question, actually. So here's a statistic which is pretty interesting about divergences. The majority, around 80% of SMTs that actually form, if you look empirically, break. That is to say that within a daily candle, every new phase of price will be contained within a swing point that forms SMT. Now, SMT breaking in and of itself is actually a high probability trade to take. And like you said, it depends largely on the market structure and the bias for your draw on liquidity. Now, here's how you can filter, at least how I filter SMTs using my trading system. So the first thing is that in order to validate SMT, you're going to need a key level. And if you're trading a reversal, a key level is always an external range or an internal range, like a fair value gap. Typically speaking, when you have a daily candle with several 4-hour candles, like we talked about, right? One of those 4-hour candles will form the low or high of day. That specifically, when it forms from a key level, will always involve a cracking correlation of some sort. So that's going to be an SMT, or if you've probably seen some traders use quarterly theory, we'll use precision swing points as well. Now, the issue with just blindly using SMT is if you don't filter your SMTs with key levels, like you just said, they're going to always be forming. In fact, every retracement in the market, every consolidation, and every expansion is going to have SMT as well. So
you're telling me basically that do you need like 2 SMTs to pair up? So like let's say a 4-hour and then a like 5-minute, 1-minute.
Here's actually a better way I could explain SMTs that are high probable. Every high and low of day is made with an SMT, always. So we can start from that and just say we can profile a daily candle in terms of the reversal point of a candle, right, in a daily candle with an SMT. Now, when you go one step further into profiling daily candles, we can also say the following. Highs and lows of days are either made from 4-hour gaps or they're made from order paired ranges. Like, for example, today on Dow, it'd be a great example to look at kind of reverse engineering how SMT logic really does play into the market. So if you go to the Dow, you can see that if you go to the 4-hour chart specifically, right?
Yep.
A high of the day is made from that order paired range. You see those highs, that previous day high?
Yeah.
Yeah, we sweep that out, and NASDAQ puts in a very spaced out divergence with that high. So that's the first stage of SMT right there. So we know that that's going to be a probable SMT that can form in the market. Now, in order for that to be considered a true reversal using the logic that I teach, that's also going to have to be a 2-stage SMT. So what do you notice about that 4-hour candle closure at 6 a.m.?
This one from the Dow or from
For both of these assets. So we're going to use 2-stage SMT. Which
the 4-hour candle from NQ closes bearish while YM's closes bullish.
So that would be considered a 2-stage PSP. So that would, when I see that, a 2-stage Kraken correlation forming the high
PSP. What is
PSP? Swing point is a candle that closes in the opposite direction of another correlated asset. So a PSP is just a up close candle on one closely related asset.
Okay.
And a down close candle on another closely related asset.
Wait. Can you tell me what is the wording behind it?
Precision swing point.
Swing point.
So this is a swing point here. This is, and you can see this is this right here does not look like a reversal candle whatsoever, right?
Yeah.
This candle too. Now the fact that it's a precision swing point and you have this SMT forming with the previous day high is giving us a little bit of indication as to this SMT is likely to hold. Because the weaker asset here, which is NASDAQ, right, is closing as a reversal candle, C2, and is closing bearish. So 10 a.m., as you can see in this case, now expands into the range. And this is where we now look to, we have a swing point. This is where I'd use SMT in the 10 a.m. candle to now get on side with a bias. So now we have a higher low of day formed with some sort of SMT sequence, which traders who use SMT would use it similar to this. Now we're going to look for that same kind of sequence on a lower time frame. That's where 10 a.m., you pull up the 30-minute chart again. This is where the ideal sequence actually prints for sell side delivery at 10 a.m. So you can see 10 a.m. opens into a gap on NASDAQ on the 30-minute.
Yeah.
And that gap high right there, right, on NASDAQ.
And then you look for another SMT within the the two candles.
Yes, and what?
Damn.
What we would call that, right? If you follow my trading approach, would be something called a strength switch, because NASDAQ is the weaker asset, correct?
Yeah.
And the weaker asset here, right, by nature of it being lower in the range, you would expect it to make a lower high, not a higher high, correct?
Yeah.
Now, because YM is already reversed, that same high is the high of the range. So that SMT right there is a very high probability SMT fill. Why? Because it's filtering on a key level with a higher time frame open. So not every SMT is created the same, but you see how in this case, this is an SMT in a fair value gap away from the high of day, right? We've now been able to, if you look at components of trading, we now have a drawn liquidity, which would be sell side liquidity. We have a profile that supports it. 10 a.m. is opening high. What's it opening high into? A gap. Now, how are we going to confirm a swing point? We use Kraken correlation or SMT to confirm real swing points, because real swing points are always made with SMT. In this case, you can see that gap, that swing point, that is the high of the 10 a.m. candle itself, is created with that SMT, right? The 10 a.m. high. Yep.
Yeah.
Right there. It's in that 30-minute gap, right? How do we know that 1 hour gap won't get filled then, right? Is a good question that we sometimes ask ourselves. Well, it's because you can see we get displacement expansion away from the 30-minute SMT fill. So once we get a 3-minute SISD lower, for example, that would be the mechanical qualification of a swing point. So once that SMT forms, once you get a CISD, that's how you would mechanically say, I can put my stop loss at a higher time frame wick and then trade the body, right? So that's one way you use SMT. Now, SMTs also can be a red herring, like it was in my trade today as well. Because I had the wrong bias, you can see when that 15-minute gap formed SMT on NASDAQ, it actually broke. So if you go to the 15-minute chart, and just rewind until that gap was printed on NASDAQ. It's a very small 15-minute gap. Right at 10.
Which one?
It's at 10:15, I believe.
Okay, this gap right here. Okay.
So if
before
you go,
or like right here?
If you go candle by candle, you're actually going to see on the 1 minute chart. Yeah, if you go, no, you can wait till that gap is printed. Here's where SMT, right, can be pattern traded like I did today because I had the wrong draw on liquidity. Like I was completely wrong about where the market wanted to go. I didn't actually think about the context of the market. I just said, oh, NASDAQ should go higher. And I waited on the 1 minute chart. If you go to the 1 minute, when that 1 minute chart gave me an SMT fill at that 15-minute low, it was with the ES. I just simply was like, okay, this is going to be bullish, right?
Yeah, okay.
It was right in there. And then you can see that SMT
right there.
Breaking. Yeah, it ended up breaking, right? So the ES also took out that low eventually as well. And those SMTs didn't hold. In fact, it was the bearish SMT, right, that printed and price traded lower. Now, here's one way in which I really could have taken the right SMT of the day. So like we talked about earlier, when Dow trades into the previous day high, if we just put a horizontal line at the previous day high, there's only a couple things that can happen at this high. It's either going to reverse off of that swing because that's a relevant swing. If you look left on Dow, we can understand very clearly why it's a relevant swing. There's nothing else looking left in terms of market structure. Where's the next swing point? Mark it out way on your chart. It's all the way at the range high, right?
Yeah.
So the next relevant swing is what we consider to be not very proximal. It's not close at all to the current price. So in order for NASDAQ to trade higher to that same daily high and break that SMT, we would need to see the Dow Jones not reverse. Now, clearly, what is the Dow Jones doing when I enter my NASDAQ trade? It's reversing. It's V-shaping lower, right? So there is a context piece that also really matters when you're trading SMTs. If you go and you use maybe a 15-minute chart, there's a clear invalidation. You look at that 15-minute gap on Dow and NASDAQ. Yeah. So if you rewind to right there, 10 a.m. That gap needs to be respected on Dow for me to even consider trading NASDAQ higher. Because if Dow is going to reverse off of that high, all SMT divergences in the market that are valid always lead to displacement away from those swing points. Because SMT itself is what validates a swing point. So in this case, I'm clearly being shown that the market takes out the previous day high on Dow and then expands away from it. As you can see, an inversion fair value gap trader would probably capitalize on that type of move, or someone who trades, lower time frames like swing points would probably capitalize on that move as well. Whereas myself, I was thinking, well, this should just go higher, and it was just kind of ignoring all the context of Dow V-shaping lower. And like I said, phase of price matters a lot for SMTs, and this one here, as you can see on the chart, is pretty obvious that we're reversing off that high.
Okay, so I did not know, like I knew SMCs were important, but now that you tell me all of this, it's like mainly the core of where you're trading, basically. Mainly like how you would think that price is going to create a swing point in the market or not. So
absolutely, and it also comes down to what I teach is profiling. So in reality, every daily candle consists of only a few 4-hour candles, right? If we think about it, we have 1500, which is 6 p.m. to 10 p.m., 10 p.m. to 2 a.m., 2 a.m. to 6 a.m., right? And then those 4 candles repeat for the New York session, right? 6 to 10, 10 to 2, 2 to 6. Now, the nice thing is that almost every single day, if we just look at a daily chart, we know typically what our bias is going to be if it's bullish or bearish. Like if we want to trade higher or lower, because over 75% of daily candles are not inside bars. We know that. So if we look at a daily chart on NASDAQ here, we can prove it to ourselves. Go find the last inside bar daily candle for me. It'd be very difficult, meaning a candle that does not
this one. This one, but we had an SMC with I remember.
So true inside bars are actually quite rare. Inside bars are defined as consolidation. You actually see one there, 2 candles to the left.
Right here,
And then the next day, right, you probably wouldn't be surprised to see that we have an SMT sequence that forms the low of that daily candle when it takes previous day low before then taking out the inside bar high. So typically speaking, we understand that the daily candle is either going to target the previous day high or the previous day low. We just need a way to get on side with a 4-hour expansion candle in that direction. And that's why SMT is an important part of my system, is because it allows me to say which session is actually reversing. If we think about it, Asia is 1800 till 10 p.m. If Asia is going to reverse, I'll tell you that lows and highs of days are always made from 4-hour gaps or 1-hour order paired ranges, so swing points. I can actually get a very good indication of what session to trade based on which 4-hour candle is trading into a key level, a gap or a range, and then if SMT is printing. So if you go to Friday of last week, you'll see exactly why I trade the 10 a.m. candle on the 4-hour chart. Okay, so we can do, so I'll do it on my computer as well. So if
right here.
Yeah, if we go to the daily open, right, for this day, look at the daily chart.
Yeah.
Okay, so what we've done is we've taken out the range low, right?
Yeah.
So I'm thinking, okay, we could trade back into the range. So this is Thursday. We're trading into a fair value. Are you on, like, is this Thursday?
No, thank you.
The 6th? Yeah.
Yeah. Yeah. No, 17.
Yeah, go to
July
Thursday.
17.
Yeah, go to Thursday, the 6th of August. Like last Thursday.
Oh, okay. Shit, my fault.
No.
Thursday 6.
Okay, so if we look here, and again, I'm gonna bother you to also keep an eye on the other assets of interest here. Okay.
Yeah.
So you can see that the way Thursday's candle, right, has closed, if you look at this large wick candle coming into Friday, is a reversal candle off the low. But look how close in proximity the Dow is to Thursday's low on Friday's open. It's going to be tough to look at multiple charts, okay? Do you see how close we are to the low on Friday's open?
Yeah.
So I already know that NASDAQ is inside of it. Go to the daily chart. Let's make it really simple. This is how we use SMT, high probability SMT. NASDAQ is inside of a what?
A gap?
A gap. So it can go internal to external if we form a reversal. Now I know that the reversal, meaning the extreme low, must form with SMT. So mark out that low, the previous day low. Okay.
Or the YM.
On Dow, yeah. Make sure that you're on the same date as well for Dow. I don't think it's on. That's Tuesday.
Oh shit! Yeah, right.
Yeah, you just gotta sync the days. And
I don't have it there, but
just click on there and then play out one more day. Yeah. Oh, okay. It's not rewinded. Yeah, it's not rewinded.
Yeah, you can't rewind both.
Okay.
Okay, I see it. And then you'd look for.
What we can see here is that on the Friday, which is August the 7th, do you look at August the 7th Friday on Dow? Do you see how it sweeps out the previous day low?
Mm-hmm.
Okay, so mark out that SMT. It's okay. We can do it in hindsight. We don't need to do it in real time, just for the purpose of demonstrating SMT.
Yeah.
Okay, cool. So that right there, do you see how far away from the low NASDAQ is?
Yeah.
I actually would encourage you to draw a premium and discount tool now. So grab a premium and discount tool and look at that wick, right? Or look at that range. NASDAQ is in a premium market forming that SMT, while Dow is below a low. So I know that this is a high probability SMT to hold because NASDAQ's not making a deep retracement into that low. It's instead forming a very shallow retracement for the daily candle and then expanding. So let's hop onto our 4-hour chart now. Here's where you'll see that divergence, right?
Yeah.
Now look at what happens away from that on all assets. Do they all expand away? Play out some 4-hour candles. This validates SMT. So the expansion away from an SMT validates it because that's creating a swing point. And whenever price reverses, it must expand. That's the next phase of price after reversal. So at 10 a.m. here, you can see NASDAQ creates this 4-hour gap, correct?
Yeah.
Cool. That's going to be a key level. Again, that's where we're going to be filtering SMTs from. We don't want to pick random SMTs in the market. We want them at key levels. So I already know we have the low of the day created. That's the 10 p.m. candle low. Now I'm looking for a continuation from a gap. What do you notice about the Dow? Play out some Dow candles as well. A 4 hour. Push that over to a 4 hour chart.
You can't really do that.
You know what you should do? Moss, go to your top right under where it shows your screen layout. Yeah, there.
Right here.
No, the one to the left where it shows the 2 panels. And sync,
yeah,
sync your time and your date range, as well as the interval. And that will actually have, and then you can use the replay function and it'll work. That's perfect. Just those ones. So now go back to the replay function on NASDAQ.
Okay.
Yeah, you can just go to that 10 a.m. open. Actually.
Right here.
Perfect. So now you're seeing exactly how I would see this. Okay. So the way I see this is that NASDAQ has expanded away from the low. So is Dow. All assets have expanded away from that SMT. Now, the other side of the range is the only draw on liquidity for NASDAQ, right?
Yeah.
The highs. But we're very far away from those highs. So this candle here, the next 10 a.m. candle, objectively is unlikely to reach into the previous day high, Wednesday's high. But I'm still bullish. So I just simply mark off that intraday high. This is trading to an intraday high. And now I'm trading from internal to external, right? So play out the next 4 hour candle. There's your SMT sequence. But what's really cool about this? Which asset was much stronger? Yeah, NASDAQ or Dow?
This point down.
At the reversal, which one was stronger? Which one made the bullish divergence at the previous day low?
Oh, the previous day low, it's the NASDAQ. Okay, so since it's a daily SMT where NQ made a higher low.
Yes, you would expect NASDAQ to continue making higher lows. So what's interesting is that NASDAQ is manipulating lower while Dow, which is much lower in the range, is actually forming a bullish divergence. That right there is a cracking correlation, which means something because it has a narrative around it. If YM was going to trade lower today, right, it would be forming lower lows as well. However, that strength switch, which is typically only involved with cracks and correlation, is how we define that, makes it extremely high probability for this next 10 a.m. candle to expand higher. Okay, so we don't trade Dow here. Clearly, we don't trade Dow. It's much, much weaker. We don't want to. We want to trade NASDAQ. So now let's zoom into that 10 a.m. candle. So let's go down to like a 15-minute chart. Okay. So look at how choppy this reversal is here, right? Here is where it's very difficult to engage the market in this type of 10 a.m. open. But as you can see in this case, right, because we don't have any sort of clean swing formation, it's just consolidating. In this case, the only trade I could take is at that point of reversal or waiting for a gap. Now, in this case, we don't get a gap, so you have to take it at the point of reversal. How do we do that? Well, what do we need to qualify a swing point?
SMT and CISD?
So you could take a 15-minute CISD there, sure. Now, what I'm going to do is refine that because look at the range I'm trading. Let's just rewind a bit. So rewind to just where we tag the gap.
Okay, so like
right there. Just rewind to right there. Okay. Now mark out. Now this is something really interesting. So this is what I'm talking about, how SMTs break a MOS, and this is why it's really powerful. Mark out the external range high on ES, NASDAQ, and YM. You're going to notice something, which is probably my highest probability trade setup. It's called SMT breaking. We're trading a middle asset here. So look at the highs. You'll notice that ES takes the high in that 10 a.m. candle.
Yeah.
It goes internal to external. So does YM. YM also takes the high. NASDAQ has yet to do that, okay?
Yeah.
So now we're thinking that NASDAQ could catch up and break that high with some sort of sequence, right?
Not gonna lie, bro. The amount of there's so many entities right there, bro. I'm not gonna lie. I am starting to tweak out right there.
Well, it's obviously not your trading model. So, of course, if you explain to me your trading model, I would probably struggle just as much, right?
Holy shit. I'm not gonna lie, bro. You definitely know your shit. It's kind of crazy, but bro, the amounts of things that you look at is I can't look at that many things, bro. Actually.
Absolutely, and you don't. Again, it's not a trading model that I expect you to also trade. It does give me greater RR, and it gives me some better setups every once in a while. But for me, it's also about just like I'm trading the daily range typically, right? So If I have an opportunity to take one shot with that daily range and get the highest probability set up, then adding these confluences really does, like for example, my win rate's in like the high 70s, and my average risk to reward is above 3. It's 3 point something. So it gives you, it allows you to lose. Like I've been having a really bad month. I'm gonna be very honest. Like I think I'm down 4.5 R in August. Now last month I was able to make like 37 R, just because the variance of this model specifically allows for very high risk to reward. So yeah, I'm not expecting everyone to trade this way, and not that it's the best way to trade. It's just the way that has given me consistency, and also given me an ability to take losers and go through drawdowns and then capitalize on high like risk to reward, right?
I mean, the thing is with me, I like because I can see like the exact things that you look for, but where I kind of course there's a learning curve to all the models where I kind of miss, like I don't really understand is like some invalidations, and sometimes you will do this, sometimes you will do that, but it's there's of course I do this even in my own trading style. We cannot really understand exactly the way that you trade within a 30-minute explanation. It would take so long for you to go over all the.
Yeah, I've been trading for like 7 years. Teaching.
How old are you?
I'm 27.
Okay, you're 27. Okay.
I've been trading since I was 20 years old, and I've also been teaching this approach that I trade for 4 years now. And what I will say is that it's not something that you could explain in like a 1 hour session, right? If you go to
for sure.
I have a master class on my model, which is about 10 hours long, which is the foundations of it, but it's a 10-hour long master class on my YouTube channel, right? Like there's a reason why it's 10 hours worth of content. I would say like any model you can be profitable with, as you can trade trend lines, support and resistance, like stochastics, inversions, whatever. You just have to find an approach that resonates with you, right? And for me, like the ability to take losers was the hardest part of a lot of models that I started trading when I first started trading ICT, because the same things that would give me wins would give me losses a bit arbitrarily. This model, when I take a loss, I can either A, accept it as a good mechanical loss for my model, or B, be able to understand what errors I made in technical analysis, which I think in the long run just really helped me sit with my losses better, right? So that's why I think for you too, when you understand your model, you don't look for anything else outside of it, because your losses make a lot of sense to you, right?
Yeah,
and that's really what profitability means, is being able to sit with your losses, because your winners take care of themselves, obviously, right?
Yeah, I mean, you definitely of course, if you've been trading that model for such a long time, you definitely know like there's multiple stages of like understanding. There's like you need to like be extremely focused in order for you to take decisions, and at a certain point, if you've been doing it for so long, then it becomes second nature, and that's the same thing for me. But yeah, damn, I mean, that's a whole other world. I would say like this is really why, like I would say I consider myself an ICT trader, but in and of itself, not really, because I don't look at SMTs like that. I don't have the same kind of framework as everyone else, really. My I would say my style is such in and out very fast to the market that I can't really consider myself being an ICT trader in that sense, because like my targets are like my trading is based on targets, where most people will base their trading off of entries and placing themselves in high risk to reward scenarios. See, like it's very different, because like how I was able to backtest my model is purely based on, okay, this high has this amount of chances of being hit, and I don't mind if it goes 100 points above it. I don't mind if it sweeps the high and immediately reverses. I just take my profits and I bounce. So that's pretty much my.
Whereas like my take on it. Always going to be trading to a higher time frame external high. So if you notice, with every trade I take, if you have a fair value gap, for example, and you're targeting a swing point, that's always going to be from one level to another, right? So think about it. You have like an internal range to an external. The way I trade my model is there's always going to be a higher time frame draw above or below that. So the average RR of a trade you would take, like today, for example, that 30-minute short. Yes, there is just a 30-minute low that you're targeting, right? But you also get to benefit of, if you're on side with the daily range, you can target all the external lows as well. So the function of the model that I trade is just to capitalize on that. It's that high asymmetry of your upside when you're on side. But it also has lower frequency, to be fair, as well. I'm sure you probably take more trades than I do typically in a day, in a week, in a month.
Yeah.
Because your model, like you said, is clearly just more standard mechanical. Like you have a fixed TP and you have a fixed entry technique, and you don't care if the price expands 100 points past your TP, for example, right?
Yeah.
I'll always be targeting, for a daily candle, a 4-hour extreme. And I'm okay with round tripping a trade that goes up 3 hour, for example. That's absolutely fine with me. Happens all the time. A lot of people would look at that and say it's crazy, right? Like, how are you going to sit on a trade that's up 3 hour and round trip it? And about a third of my break even trades I'm up more than 2 hour on, right? So it's kind of just what your personal appetite is.
All right, yo, I'm coming back in like 15 seconds. I just gotta take a little bathroom break. So coming back after this, and we'll do a quick giveaway for you guys.
Let's do it.
So guys, for the first slide goal, we'll do 250. So make sure to like the stream and subscribe to the channel. All right, so coming back in 30 seconds.
Well, fees. Just another spell. Yeah, it's hard to do. It's hard to teach anything with real justice, I think, in short periods of time. But if anything I've said interests you, I do have a YouTube channel, guys. My YouTube channel has a lot of exactly what we're talking about kind of on it. It's not necessarily the simplest stuff, but it is all there in comprehensive detail. So you can feel free to watch it and then ask me some questions. Yeah, someone, I see my YouTube channel in the description. Someone shared it there. Let me see if I can just pop onto my channel itself maybe and just say, yo, this is me. This is my YouTube channel. It's a XYJ Trade. So I just put a message in the chat and yeah. You're more than welcome to click on my YouTube channel. More than welcome to sub to my YouTube channel. I'm almost at 50K. That'd be dope. That'd be awesome. But yeah, I definitely teach a lot on there, and you can definitely learn more about it from my YouTube videos. Probably much more than a 15-minute conversation, over this charts. It'll be a lot harder for me to explain things. Please summarize your process in simple steps. Okay, every single day there will be a single 4-hour candle that should expand. I'm looking to trade that 4-hour candle. I am going to be positioning myself, right, in the wick of that 4-hour candle, like a power of 3 trader would. A lot of people trade the power of 3. And I'm going to be using cracks and correlation, SMT sequences, to confirm that the wick of that candle has been made. That's about as simple as it gets, right? Obviously, the complexity there stems from doing it and all the steps involved, but that's the simple part, yeah.
All right, chat. Let's see how many likes we have currently. Let's see. We have 219 likes. So what did I say? The first like go 250. So let's bring that up to 250, my brothers, and we'll do a 50K select account giveaway for now. Currently, guys, the 6 p.m. 1-hour candle was an inside bar candle, closing back within the range of the 4 p.m. 1-hour bar. So we are not displacing in above the previous candle's high, below the previous candle's low. So for me, it's very hard to frame where my next candle would go. So we need basically to wait for that 7 p.m. candle to close in order for me to to predict how the 8 to 9 p.m. candle will close and potentially take a trade off of that. For me on the daily chart, I am bearish. I am bullish on the weekly. So I would want to see if we can put in the low of the week within either the overnight session or when the CPI hits. So we'll see. We'll see what can happen. But currently we're going to stay patient because we are stuck inside that 39-point range. We're not going anywhere.
Pretty ugly, yeah.
Yeah, pretty ugly. So yeah, how we're gonna do the giveaway, usually it's I'm gonna ask you guys to type a word, and once you type the word, then a bot will enter you in the giveaway and we'll select it completely randomly. So yeah.
Did you trade metals at all, almost?
No, I actually never traded metals. The only thing I traded, I think, within the first 6 months of my trading was crude oil. But that's the only thing. Yeah.
Crude moves decent. Crude's like seasonal. When it moves, it really moves.
Yeah.
And then when it doesn't, it just consolidates.
I actually did not even watch the chart. I watched the chart when there was like a pretty big drop. There was like a big drop on the daily, I remember.
Yeah, there's been a lot of volatility with like the Strait of Hormuz news intraday, so that's why I've been avoiding.
I mean, yeah, there's wow. Okay, oil is moving hard. Holy shit! Compared to this year, damn. Yeah.
I mean, look at metals. Like we retraced the majority. I think we retraced over 60% of that expansion on like gold.
Wow. Yeah.
Yeah, we really retraced hard on gold. I'm looking at those like June lows from 2025 as potential long-term buy for gold, but yeah. So for example, today, Amos, it'd be a really easy way for me to show you my model today, just based on the daily chart. If we look at the daily chart, YM took out the range low, okay?
Yeah.
Is there anything else YM can reverse off of besides this low? Is there anything close proximity to that low, the swing point? No.
Previous day low.
Yeah, so look at the swing point that we created in the daily chart. It's Friday's low. Last Friday.
Wait.
Oh, the 7th of August. The 7th of August. That green candle. The candle.
Oh, right here?
Yep.
We already swept it, right?
So that is the low that price is engaged in the market, right? Think about this weekly chart. You said we were bullish on the weekly chart, right?
Mm-hmm.
We both are, for that matter of fact. So if we're going to expand on the weekly charts, we need to create a swing point. A swing point, as you know, is a C2 closure. Okay. If we are going to reverse then, it has to be from this low on YM, right? It can't go any lower, right, in this weekly range. The only thing it could reverse off of is either this low or the previous day low, right?
Yeah.
Yeah. So look how far away from that same low, that range low, NASDAQ is right now. Draw a fit.
The 6th?
Yeah, it's just that swing point, right? You can mark out Thursday's low for NASDAQ. Yep.
So that low right here.
Yeah, you can mark out the actual swing point. So mark out the low to the left of it.
But this one is the 6th. When
the lows of the range are made on different days, right? Because NASDAQ's in a high gap there. So that's where a fib was actually very useful. We're viewing this as a retracement potentially, right? If you're an ICT trader, you have expansion and now a retracement. So I would draw a fib from the low to the high.
Right here?
From the range low, yeah, from the range low.
The range here.
Yeah, just like that. So in here, because NASDAQ has now come into a discount market, here is where I'd want to swing to form on the daily chart. So if I was trading my model on the daily chart, that spaced out SMT you're seeing, that's a valid SMT because we have bullish structure. NASDAQ is respecting that bullish gap. YM is forming that, divergence. So what we look for, like you said, with CPI and whatnot, is for tomorrow to stay in respect of the previous day low on NASDAQ and expand higher. Because that low is a well-priced low, right? Comes back into the range, in discount, and we have all of those failure swings looking left. Now I'd go about the day, saying which 4-hour candle should expand. So now I have a daily bias, which 4-hour candle should expand. Now you're going to see that PSP logic I talked to you about. Look at the 2 p.m. candle on NASDAQ, look at it on Dow. Right? Very simply. Again, this is me oversimplifying things quite a bit, but you can start to see some of that logic. There is a PSP there, that bullish candle on NASDAQ that's also diverging at the low.
So right now you're expecting a bullish move from it.
So now we have a distinct invalidation. That's all we have so far. I'm not expecting anything yet, but I have an invalidation. I don't want to see that low on NASDAQ taken out, right?
Okay.
So now I'm looking for continuation in that candle's range, for example. So look at that previous 4-hour candle, mark it out with a box. This is called profiling, where we go from daily to 4-hour to 1 hour to 30-minute to 5-minute, all that good, right? Like, okay, go down to a lower time frame. Choose a time frame you want to go from here. An hourly, 30-minute, up to you. Do we see anything in terms of a key level on these lower time frames that price can react off of to go higher?
Yeah, change in the state right here.
So that change in the state of delivery you're seeing, right, is essentially the V shape that forms the wick low. The only way price can leave that now and go higher is if we do what? Consolidate, form a swing, and then expand. Price only can form swings to expand. And in this case, do you see a fair value gap on any time frame that's really relevant? Nope. I don't see a 30-minute gap. I don't see an hourly gap. I don't see a 90-minute gap, right?
Yeah.
I don't see anything relevant. So what am I waiting for price to do? Consolidate in this session, form a swing, and then expand away from that low that forms. And this is going to be my invalidation for the rest of the day. So now, just based on 5 minutes of analysis, albeit a couple steps, we now can say if price goes below the 1:30 p.m. low from yesterday, we are no longer looking for buys today, right? We're no longer looking for buys in this, fractal is what we'd say. But if we stay in respect of the invalidation, we could potentially look to trade long away from that low. And the 4-hour becomes, like you said, that's your invalidation. Yeah, so it's definitely a little bit easier to understand that one, I think.
Yeah, I mean, for me, all those SMTs, bro. This is not it for me. I'm not gonna lie, bro. If you want me to be honest, I definitely know you you got it. You know all of this. Of course, I know all those concepts. I know,
sure.
But the way that I will find my bias is so different because, like I said, my trading is off of targets and not entries. But yeah, so guys in the chat, let us know. Let us know if you find let us know if you find Afiza's strategy. Okay, type 1 if you think it's too complicated. Type 1 if you think it's too complicated. Type 2 if you like it. Okay, we'll see.
I should come on some AM streams and just take some trades with you guys, and then we'll see, in real time if we like the strategy. I think it's far easier to say it's complex when you don't see the results of it. But
no, for sure. No, I'm not, bro. I'm not hating at all. It's just such a different world from what I've ever heard, because I don't consume any content. I haven't consumed any content for such a long time.
For sure.
That I actually have no clue how some people trade, some ICT people find their bias, and so it's kind of I saw a comment earlier. Someone said it's fascinating to see so many different perspectives.
For sure.
And a lot of people being able to be
different styles of trading, right? If someone told me about stochastics or trading trend lines, I would have no idea. I genuinely have no idea how to trade that. I have a lot of friends who trade order flow as well. They use things like volume profiles, delta, absorption, level 2 data, and I look at them and staring at the DOM, dude, and I'm like, this is this is French. This is completely foreign to me, right? And they're killing it using level 2 data, and I just don't understand what these green bubble. I just see a lot of big green bubbles, and I see them use footprint charts, and I'm like, yeah, out of my world completely. It is interesting because it just shows you, I think, at the end of the day, whatever system you decide, it just needs to be one you can resonate with. I tried trading every system. I used to trade stochastics and RSIs and stuff like that, because I was a very big fan of it's so mechanical, right? When the 9 and 21 EMA cross and you get a MACD whatever flip, you buy. And for me, when I was starting trading 5-6 years ago, I heard that and I was like, well, I could always have amazing psychology because it's binary. If that, then this. The problem is that I'd get the perfect signal using, stochastics, and it would deliver a great trade, but I'd have no idea where to take my position off. I'd have no idea where to put my stop loss, and I'd have no idea why it failed. Eventually, I worked through all of ICT, as you did probably, and you just get to a point where if the system gives you a solid entry trigger, it gives you a solid place to put your stop loss, and you can do it enough times without fucking around and tilting when you lose, you're gonna make money. So that's eventually how I think everyone establishes what their model is. They just trade a system they can actually stick with for a longer period.
All right, I wanna get to know you a little bit more, Afiz. We haven't we talked about trading models and a lot of trading, but within the session we also like to talk about different stuff. So can you tell me how you got into trading in general? Like, what was the first steps? And was there anyone you were looking up to when you started?
Yeah, definitely. Like when I first started trading, I kind of joined like a whole bunch of like options trading servers, and I kind of saw a lot of not like the gurus, but people who would just I think trade a system that I'd never really understood before. So I was just trying to learn as much as I could from that. And then I realized with time that none of that really resonated with me until I found ICT, probably similar to you. So when I first started, it was mostly just watching ICT's content. I was in his charter, actually, believe it or not, in 2019. So I found ICT's content, I was in his charter, and then there was a guy named the MMXM trader who I followed quite closely, and he was probably my first mentor. Me and him are quite close now. It's awesome. And yeah, from there, I just spent a lot of time on the charts myself, and then just like you, probably over time, I tend to turn off a little bit of the noise and just focus on my own model. But yeah, I definitely looked up to ICT and kind of the MMXM trader. Yourself?
Cool. Actually just started because one of my close friends was starting trading, and at that time, really, I did not have a clue that you could make money online. I was 18 and started trading, and then immediately got hooked because it looked like a video game. It was exactly like a video game. And I started immediately with props, and I started with CFDs at first. So it was not, it was quite, I would say I traded that for 6 months. So it was pretty much a mess, but then ended up finding my way with futures, and spent so much time practicing it. It was crazy. I would say within the last 4 years, that's pretty much one of the only things I spent more time practicing than being in front of the live markets, for sure.
Absolutely. Yeah. Likewise. I think when I was first starting, I tried doing the forward testing thing extensively and just ended up losing a lot of money just because I didn't have a system. So then once I kind of found back testing, it was a way for me not only to test my model, but also just avoid losing money in the real markets while learning. So yeah, TradeZella became a lifesaver, man. I've been, I think to this day, I still probably backtest quite a bit, actually. I don't know about you, but I still try and get as many reps in as I can off of forward testing during the week and month.
Oh yeah, you're still backtesting to this day.
I backtest, about 80 to 100 hours a month on average still. Just always trying, well, for me, there is a refinement element of my trading. My trading has gotten much better over the past couple of years because I've refined my system a lot, right? So I think that's also something to be said about, you can be profitable, but there's I think a scale to profitability, and the ceiling is so high, and I look up to so many traders who have really found a way to push kind of through that ceiling again and again and again. And I don't know about you, but my goals when I started trading were very one-dimensional. I was I want to make $10,000 a month and quit my job. And then it was I want to buy my dream car. It was very superficial kind of things. And then I think with time, you realize that your goal in trading is to be the best trader you can be. And backtesting is one of those things that just always stuck for me because, whether I had a great week or a really bad week in the market, I could go into backtesting and I could prove to myself that the things I was spending all my time, working on actually worked, in the grand scheme. And I think that was also what helped me with psychology a lot. I think a lot of people could benefit their psychology just from getting a lot more reps to their model and understanding, their data a lot more.
I feel like I'm kind of the opposite. I would say if I backtest a lot right now, to the point that I am with my system, with my knowledge in general, I feel like I'm basically sabotaging myself, because if I backtest, let's say 50 hours a week, then what's gonna happen is that I'm gonna come into the market with expectations, and I'm gonna build up this emotional, I'd say attachment. Yeah, expectations for sure. Like, you bring in what you didn't backtest to then expect things from the live market. I would say, since I'm in front of the charts so much, I would say I don't try to switch things too much, because I know I could just be overfitting my strategy. Even if I go back in the past and I try to add new conditions, those new conditions will not necessarily, be the best play for the current market conditions that we're in. If I already done the work for, let's say backtesting from 2018 all the way to now, and done it multiple times, and it works, then I would say changing something or doing it again would just not necessarily
it doesn't
make me improve.
I also think it really does depend on what you're doing while you're backtesting. Like, for example, for me to backtest 1 week of price action takes 5 to 7 hours. So I spend about an hour and a half to 90 minutes to even sometimes a bit longer on a single session. Because backtesting for me also involves taking the trade that I would take, which probably only takes, for my system, 25 to 30 minutes to do 1 day of my New York trade. But then I also spend the rest of that session looking at what actually printed, where I was wrong, how my invalidations formed. So creating more or less case studies. So I would say that backtesting, for example, is more than just, for me at least, just taking a trade that fits my model and then saying win, loss, or break even. It also involves kind of iteratively going through a day and seeing what happened. And again, like you said, that helps me to not form fit my model, but also to recognize where I need to spend more time. Like, for example, the things I'm talking to you about today, the complexity, it didn't always exist like that. But over the years, I've added small pieces to my model through backtesting that have just increased, I think, the expectancy of my trading, which is cool. I think that's a really cool thing you can do when you spend a lot of time.
I like that. I like your mindset overall. You're definitely you're remaining a student of the game, and you have very high I'd say expectations of yourself, and I would say to grow.
Yeah, I'm sure.
Say you keep
right? Because eventually, I mean, I know what you do. I see what the numbers you put up. I know you're doing phenomenal as a trader. Eventually, and you probably tell your own students this as well. The value of trading isn't just making a certain number of dollars per month. Eventually, it really does become something you're quite passionate about. Like if you were an athlete, right? There is a commitment to mastery, I think, for every trader at some point in time. And in the same way that I'm sure Steph Curry does not need to huck up 1,000 shots a day, he will. And the same reason why, guys like Kobe were in the gym religiously when they were the single best in their field. It might sound cliche, but these people really do take the game as to a higher level, because they pursue mastery, not just winning chips and making money. And I was in school for a long time, Amos. I don't know if you know this. I was in school for 8 years. I was doing engineering and business, and I recognized that when I was doing that entire thing, if I was always going to be studying for a midterm to pass, or studying for a year to get this grade so I could move on, it was going to be a super miserable time, because I knew it was going to last 8 years. So eventually I kind of got into the mindset in college of man, if I'm going to being an engineer, for example, I want to be the best engineer. And that just kind of involved showing up as much as possible in the ways that matter. And I think that mentality translated over to trading for me, because if you ask I don't know, my family, friends, and students, they're like, yeah, fees is fucking crazy for back testing 100 hours a month still. And I think, it comes down to like just building it into your routine in a way, right?
You definitely for sure have like that. I can see the fire is still in you, which is kind of crazy. Usually after like 7 years, your the fire is out. But the thing is, like, I have a different view though of the markets in general. It's like, for me, like, it's such a different trading is such a different thing than sports, because because of the fact that there is quite some randomness. There's the randomness aspect to it, you know? And also market conditions, they do change, and we are in a dynamic market, meaning that even if you have a good edge, the adaptation part is such a big, I would say, component of you being able to stay profitable for the long run, that, you know, to a certain extent, how much work can you truly put in to get better once you have something that works? You know what I mean? At that point, is it not really more about being a little bit, uh, I would say, putting more focus into the mental game of trading and being able to understand the way to scale or adopt new business plans for prop firms, and being able to, I would say, digest the bigger losses? I would say, like, for me, it's like, technicals, in a sense, I know that they come, they go. You know, sometimes you're
Sure.
going to be in the biggest winning streak of your life, and at a certain point you will encounter a pretty big losing streak, and you will probably say to yourself, damn, what I'm trading is not working right now. But at the end, how you blend everything in, like psychology, risk management, and your edge in general, is really, and also the adaptation part, is really how you remain profitable. So I would say, like, in terms of technicals, I would say there's like for me, I believe there's a cap
For sure.
where, even if you are trying to learn new things, you are probably going to cost yourself some money, because you are basically, like I said, overfitting your model, or like you're trying so hard to find new confluences, new this, new that, when in reality that confluence could disappear and not repeat itself within the
Totally.
future. That's
I
how I think, you know.
I actually agree with that largely, and I think the point you made on like training your mind is largely understated. I think that most people would benefit from a better understanding of their model. I mean, like 90% of people would benefit from a better understanding of their technical edge. But then for those who have that technical edge, they have to understand what's going to give them that 10% that takes them over the edge to always be locked in. And the reason why I say always be locked in is, as you know, trading isn't one of those things where you can have bad days psychologically. You can make mistakes as a trader. Like, I think this month's a really good example for me. Like, if you, I don't know if anyone from like my Discord, for example, is in this stream right now, but like I've made a lot of mechanical mistakes in August. Like, I came off one of my bigger months in July, and I think my confidence was very high, and I just kind of slipped mechanically in August, took some bad trades. What you can't mess up on, and I know you'll agree with this, is you can't have a day where your psychology slips and you blow everything, right? Those
Mhm.
big losing days, it just takes one. And I've had days on personal accounts in the past where I've lost, like regrettably, I've lost close to six figures in a day. I'm sure you've had big days on your personal accounts where you've lost, and it's just really hard to stomach those days. And the one thing that I realized for my own psychology was actually putting in the reps, like you said, like the technical reps, is what kept my psychology at a level where I wouldn't ever teeter over the edge. So what I found is
And I
that
agree. I agree so much with that.
myself losing and back testing was what kept me confident enough in like right now I'm in drawdown. I'm at about 4.5 R on the month in drawdown. I know there's a version of myself in loss that's 4.5 R in drawdown for the month, and I'm just everything's gone. I'm blowing everything. I'm clicking. I'm revenge trading. But for me, I've been through streaks and back testing where I'm down 4R, and that's just a couple of winners. So I completely agree with you. At a certain point in time, I don't think you change your edge very much mechanically, and you can totally overfit your model. And
Yeah.
we're all guilty of doing that. Even my model, as it stands today, is extremely technical. And I understand that there's some times where I'm trying to answer every question, and the only answer is, "Hey, I lost today," and that's. But for
I
me,
agree.
those reps, in the same way, I think again, I use the example of Steph Curry again, just because he's like one of my favorite players in the sport. But I also just know his work ethic with respect to the game. He shoots 1,000 3 points every practice, and I know for a fact for him, the mechanical nature of that three is like the back of his hand. I know he doesn't get like expectancy from shooting that three more than maybe 20 or 30 times. I just think seeing the ball miss 5 times in a row at one point in time, or seeing the ball, go in 5 times in a row, keeps his mind exceptionally sharp. And yeah, that's my justification for backtesting. I don't know. Maybe there is a better use of time than just backtesting to prep the mind. I just
I
haven't
think
found what that is for me yet,
no,
right?
I think yeah, I think that's such a personal thing though. I think that's like for you, that's the way that you can cope in a way where okay, if you backtest, you have the confidence behind why you should keep trading that system, and no matter what happens on the chart on that week, then you cope with your data. You go back and you lean back on your data, saying to yourself that okay, whatever I trade, even if it did not work this week, or even if I was down 4.5 hours, I know I have edge in this market, and I love that, and I'm the same thing. It's just I find myself, being too attached, and I think like um, I at a certain point, I think what I became was like I became a good backtester. Let me give you guys a little bit more information on that. It's like at a certain point, I was like getting so much satisfaction from getting good results in backtest that then when I would sabotage myself in the live markets, I would actually not even care. I was like, it's all good. But I would always lean back on that to the point where I was not even making money with a real edge, just because I was just good at backtesting, but not even I was not able to replicate that into the live market for such a long time because I was just too attached to, I would say, that part. Um, it's like being good at a video game in creative mode, but not putting that into uh, practice in the real game. If you, I don't know if you played some different games, but it's
Did you ever
literally
play
the
a video
same
game,
thing.
bro? Were you ever like a PC gamer at all?
Yeah, 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 absolutely.
I played a lot of League of Legends when I was younger.
Oh
I think
yeah.
I think that back testing kind of the reason why I back tested a lot might also stem from that. I played League at a pretty high level, but I was also
What was your rank?
so I like peaked out probably in my first year college intramurals team at like Grandmaster on Vayne, but I was also like a one
Holy
trick.
shit.
So I
Okay, 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 okay.
one trick though. So I would also spend a lot of time just playing one champion. If you guys play League of Legends, I don't know.
What champion were you playing?
It was Vayne.
Vayne.
AD carry. But for me, I low key could spend a Moss like I don't know a ridiculous amount of time just like trying to like CS better or like working on my rotations or back timers and stuff like that. And then in trading, I found backtesting very similar. Like sometimes I'll do a backtesting session and I'll just focus on one part of my model. So we talk about SMT, right?
Yeah.
Like I built a playbook around SMT. One of my trading models is called middle asset SMT breaks. If anyone follows me on Twitter, they can look up the words middle asset SMT break. It's a very mechanical type of trade, and it has 4 components. And that was similar to like in League, like just focusing on CSing. It's just one specific like playbook or one specific mechanic that I spend a lot of time trying to understand better. So I think if you're a gamer, you're kind of used to that actually as well. I know a lot of console gamers spend a lot of time in practice mode doing the same thing. They just like work on like one thing, like hip firing, or I don't know, right? So
Yeah. Did you play any sports growing up?
I played,
We talk a lot about sports here, so
yeah, I played basketball. I wasn't the best, I don't think, but I still do play basketball actually with my
oh,
boys.
yeah.
So, yeah, you?
I played I would say most sports growing up. My favorite sport was definitely soccer, the one that I was the best. So
Did you
yeah.
actually watch any of the World Cup this year?
No, I didn't. I actually did not.
It was actually in my home city. Like it was in Vancouver. A couple of the games.
Oh, you're in Vancouver. Okay.
Yeah, I went to see 2 of the games.
Do you, okay, so What's your play style when you play basketball? Like, are you shooting? Are you like, what's your position?
I usually play like point guard, so I'm like smaller. I'm only like 6 feet tall. I'm pretty skinny. Yeah, so just like shooting, like 3-point shooting essentially.
Bro said he's small. He's only 6 feet tall. All right, brother, get
Well,
out here.
for basketball, so I'm
All right,
pretty
bro.
nasty, bro. I'm
All right,
pretty
bro. Humble king, a humble king. Yeah, yeah.
in basketball. That's not super tall.
Yeah, for
I'm
basketball,
also
I get it.
skinny. I'm super skinny, so like I couldn't really check up
Damn,
my things.
this shit, you actually made me laugh, bro. Fuck. Oh my days.
But yeah, it's a really interesting conversation actually. It's also. Do you believe in the idea of like natural talent in trading?
Hmm. No,
No,
I,
you
I
think
I
it's
believe I believe in having the brain already wired to stomach bigger losses and like depending on your aversion on risk. I would say like some people are so risk averse that they cannot, at a certain point they will not be able to scale no matter what.
sure?
And some people are just, I would say, have that degen mindset where they're like all in or not, or nothing. And those kind of people tend to do either very good in trading or tend to do very bad. But I would say like, do I believe in like natural talent? That's the thing. Like trading is such a different thing than like sports because there's randomness into it. You gotta take into account the stochastic process behind it. Wins and losses are randomly distributed, meaning that even if you're right on the trade, there could be an aspect of randomness where you don't even know the true reason why you won.
Of course.
There's like this like once you get into the game, you think it's easy, or like you think, okay, I'm just gonna have my little system, it's gonna make me money. But the more you dig into it, the more you're like, okay, damn, I don't know shit about anything anything on in this game. And like the learning curve is huge, and there's so many little aspects into it that tells me that it's not about talent. It's not about talent at all. I would say like you definitely need talent in order to create an edge.
Sure.
Okay, but do you need talent
To be
to,
profitable,
is
right?
there like natural talent where you're gonna show up on the chart and you're just him? No, I don't think so.
You know, it's I asked that question because I think it actually is better to this follow-up question I have, and that is, does trading even involve psychology if you understand very well the stochastic risk and also the stochastic nature of your model, right? If you understand truly and accept truly the variance of whatever approach you take in the market, is trading just like playing a game like blackjack with perfect strategy, or playing more realistically playing poker with a ideal hand, right, of expectancy? I
I
asked
think
that question because a lot of people think that there is a huge like psychological element to trading, when in reality, I think trading is probably more akin to pocket aces in poker. You decide when you place risk and you understand the stochastic risk of doing that. Sure, pocket aces can lose. It's just a highly favorable disposition for you to be in as a trader. So when your model appears, when you have everything aligning to give you a stochastic edge, then do you even need is psychology even a real thing you should consider while trading, or do you simply not understand your model well enough? Like,
it's a good,
here's my question,
it's a
would you ever not double a soft 11 in blackjack? The answer stochastically is no. You always double a soft 11. You never take insurance ever. You never split. You always, right, double a soft 11. So if for example, if I'm the dealer and you're the player and you have a soft 11 and I have an ace, you know what you're going to do. Even if you're up against the greatest odds, you know that
Mhm.
your best hand is to double that 11, not take insurance, and see what happens. And there is a playbook for every single hand with stochastic edge that you understand perfectly. In fact, playing
Mhm.
perfect strategy blackjack, you could teach to a 7-year-old, right?
Okay, but like when you're asking me that question, are you referring to like me doubling up on a real trade in the live markets?
No, I'm saying if your trade setup appears, you understand the
Okay, so
risk.
like there's okay, yeah. So you understand the game in general, meaning
You ever
that
have to feel
wins
emotion?
and losses are randomly distributed, so there's not that much psychology involved. That's what you're saying.
Well, I'm actually asking you because I think that I disagree with that. I think that even though I can understand the system perfectly, there is some part of me that's just human in nature that's always like, yeah, but I'm gonna feel something if this perfect setup fails, or the 5 losses I've taken in a row make you feel something, and that's why I always say that algorithmic trading, if you had edge that could be coded, it would be arbed out of the market through algorithmic trading, right? All of the edges that we trade, you, myself, and every other trader, um, even on this channel, if it was completely mechanical, if it was completely stochastic, then we'd code up an indicator and we'd sit back and allow that process to generate alpha over the years while we just went and played basketball and soccer and enjoyed our lives. The fact is that no mechanical can be 100%, no model can be 100% mechanical, and the stochastic variance of every model is actually what gives you edge, right? It's the fact that there's sometimes these huge asymmetric runs in your model. Sometimes you go on a winning streak and that gives you a buffer past your trailing drawdown that gets you to multiple payouts, right? Like
that's why trading props is easier, bro.
This is the argument for anybody. It's like, if you have a 100% mechanical system, wouldn't you just pay? Like, I would pay a quant just to develop my trading model into an algorithm and never place a trade again. I would pay a good sum of money for that. I'm sure you would as well. The reality is, it's when that IFEG forms with an unfilled gap above you, and you're like, I don't want it. And there's something in you that is just saying, I don't want it. And that discretion, I think, is always what results in emotions, both good and bad. And it's very hard to get rid of that, which is why I think that every profitable trader who's not trading at like 2 Sigma or Jane Street or, a large quant is discretionarily trading. Nothing is 100% mechanical, right?
Yeah. I mean, the thing is, on that, bro, I'm not gonna lie. My approach is like 98% mechanical. So like, it's kind of hard to say. Like for me, I would say like psychology is for sure still like a very big part. And I think even if you have edge, the true like what's really happening inside your mind is that you have edge. So now you have expectations, and then when the reality doesn't meet your expectations, then there's emotions involved and a reaction also from the human being. And the greater the I would say, if the difference between the reality and your expectations is big, like the bigger that distance, basically, the more you're gonna react, really. So I would say, like, for me, it's more about expectations than anything else, and also like about like your definition of success. Like for me in trading, like I don't see myself risking, $100,000 in a trade.
Okay.
At least not now.
Yeah.
Okay. Why? Because with the approach that I trade, and also my personality, I prefer making a certain amount with a certain approach that is more certain than something that uses a little bit more discretion, that could potentially give me the asymmetry that would make me more money in the long run, because I'm not that type of person.
Okay, that makes a lot of sense. So would you ever consider like completely coding up your model, making it automated so you didn't have to execute it yourself personally?
I've definitely thought about this. The only thing though is like I still love what I do. Why would I not trade manually still?
And
But that's a good point. What you said is an extremely good point. But for me,
you have good
like
psychology.
I am, yeah.
A lot of sense, right? Because you enjoy your job. I also can see that you enjoy interacting with others. You enjoy kind of bantering, going back and forth. There's more of like there's more than just the charts with trading, right? It's also like a social game, which
Yeah,
it
yeah,
can
yeah.
be isolating, and you found a way to make it a lot less isolating. It's just I'm curious. I'd be curious to pick your brain at another time and say, if your strategy was 98% mechanical, like if you were able to code that and then prove right a stochastic, expectancy, but through high degrees of variance or whatnot, different types of like market volatility regimes, whatever,
Mhm.
that'd be something that a lot of people would be interesting in kind of investing in or investing behind, and you could actually scale up your capital quite easily through essentially being your own kind of prop shop, right? It's interesting to think about how individual strategies could turn into like group funds, but what I'm essentially describing is
You're
how
right though. You're absolutely. You know what? You're absolutely right. But that's the thing though. It's like, where do you start with those kind of things? Because for me, I have found what I found, but like, where do you even go on from there?
yeah, the thing is, so
Like,
like
where do you go? Where do you go to do
I
that?
I recently built out like an indicator for my model. Lots of components of what we talked about in my model that are actually quite mechanical. For example, lows and highs of days being made from 4-hour gaps with an SMT. That right there is like an if then, and it's called joint binary logic. It just involves two things that both have to be yes for you to go to the next step. And I realized when building out my indicator that a lot of my logic was actually not so mechanical, believe it or not. So
Mhm.
it forced me actually, I was working with an indicator, with a developer to, essentially do what I just said to you for every single part of my model, which improved my model substantially over the past 2 years. Because working with a developer, he was like, he's like, you're just, like, this is not going to work in all cases, right? What you're saying here doesn't apply kind of universally. You need to have frameworks that I can say, if this happens, then we do that. And in doing that with him back and forth over about 6 months, I realized that the way I was teaching my own students and the way I was trading was actually involving a lot more discretion than I even thought. I thought everything I taught was quite mechanical. These days, it is far more mechanical because the developer came back to me and he's like, yeah, he's like, tell me exactly how this sequence forms. And I was like, I gotta think about that a bit more, I guess, right? So I'd be
Yeah.
curious if you ever look into that, like what you'd come back with and kind of how mechanical your model would be, because I've obviously seen what you do, like an amazing trader, and you have very consistent results. It'd be cool to see if that's something that you could actually code up extremely mechanically, and then let
Yeah.
that run on the side with a personal account of yours while you're trading, while you're scaling up your capital, and see how far that thing can take it, right?
Yeah. 100%. You're definitely right on that. But we haven't even spoke about the charts really. We just spoke about a lot of different things. I would
Yeah.
say currently I'm gonna look for a long actually. I would want to see us go back towards that 4-hour high here. We can open up lower at 8 p.m. and I would try to put I would have a wider stop at first, but let's see if I can get picked up here on this long here at 8 p.m. I needed to open up lower though. So I'm in. I would want to see an immediate bounce. Flip right back above the hourly candle's opening price here if we can. Hourly candle opened with no top wick, not the best thing in Asia, I would say. So now we're flipping. Once we flip above that open, yep. Okay, so I'm already break even, chat. Let's see if we can rally up to that 4-hour high.
What a sniper entry, bro.
Yeah, I just want to see us use this high as stops. Come on. This 8 p.m. is so lame sometimes, bro. Come on, just don't gap down. What is that? Yeah, break even. That's just a break even trade on this one. I really wanted to see us opening up higher right there, back towards that 77 level. and then being able to take out that 4-hour high right from the 8 p.m. open, but unfortunately we don't see that. I would say there is still some pretty good there's still a pretty good probability of us going back towards that high before closing bearish on that next bar, but if we don't do it from the first 5 minutes, for me it's over. So 2 break-evens this week. Damn, unfortunate. I mean, it was such a good entry also.
It was a really good look, actually. That 4-hour.
Yeah, I really wanted to see us just opening up lower and just driving back up towards 77. It could still happen right now. It's just that perfect timing here would have been great. Let's see ES here. I mean,
dude, what I would be looking for here is YM has all of those equal lows. YM looks terrible in lower time frame, but if we can run out those equal lows, that could form a swing, right? And then I really like the long idea you have, though. It's a good one.
Yeah, that 4 p.m. high, but you see that break even was kind of definitely the best decision I made.
That was really good management.
That's the thing that happened yesterday too. Like I got break even twice, and both of those trades ended up smacking take profit in like 1 minute after that. But I was like, it's so easy to say in hindsight where, you know, when you enter a trade and then it goes back to your target immediately. If it would have gotten the opposite side, then it would have been the best break even. Exactly like this one. So all right guys, we're gonna run some giveaways. So first like goal was 250. Now we're currently at 350. Let's do 400 likes for the second like goal. Then let's do 500 for the third. So that's free. Yeah, that's free right there. Come on guys, let's run the like goals right here. And I still think we have a lot of chances of seeing that 4-hour high. It's just I like to play off of the timing, the immediate timing of it. I would say if you flip
2-hourly open, yeah,
like that 8 p.m. open, like I don't want it to fake out.
Yeah.
I want it to be the expansion in a lot of cases. Like even if we open up in the opposite side, like it needs to flip very quick because it can start picking up some ground.
This is definitely a continuation signature, right? Like we're reversed off the lows and we're just consolidating. So the only thing I don't like is we have no gaps. Typically speaking, that's where I form like swings from. We just have like no higher time frame gaps at all. Like no 30, 15 minute, 1 hour gaps. It's like a classic Asia consolidation at this point.
Yeah. So yeah. We are currently at 400 likes. Let's go, guys. Let's reach 500. So now I owe you guys 2 accounts. Let's try to reach 4 accounts tonight.
Well, thanks for having me on today, bro. It's been really fun.
What do you say?
Thank you for having me on today. Thanks to you.
Of course, brother. Of course.
Always, man. Whenever we chat, it's always quite deep.
100%, bro.
I always come away from our conversations thinking about everything.
Yeah, it's definitely a pleasure for me to have you, brother. I would say like it's like you get to meet so many different traders, so many different perspectives, and some people have that simple mindset. You know, they go for simple strategies. They have like a simple framework in general, where you're more of on the opposite side, which is definitely fascinating in a sense, for sure.
Yeah, I think it's just style, man. Like
it's
come from so many backgrounds, man. Like it's crazy. Like I look up to people who don't even trade the same system as me remotely. I just admire their ability to smack like 20 mini size, and I'm sitting here like I can't imagine where my trading would be if I could ever smack size like that. I get scared with like a single mini contract. You know what I mean? I'm still working on scaling up my size, but it's cool, man. It's cool because most of us started around the same time too. You know what I mean? Like we all started foundationally kind of 2019, 2020, especially a lot of the ICT traders. It's cool to see where all of them have grown because there's so many different ICT models these days.
is there any days that you don't trade? Because I know like a lot of ICT traders don't trade like the Mondays or Fridays.
So typically speaking, I won't trade a retracement of a daily candle. I prefer not to. So say for example, we open and we expand away from the open. You've seen like Asia, London rips, right? And then New York just consolidates or seek and destroy, chops around. If I'm bullish on the day and I'm very deep in a range, I won't trade back into the range. I won't short. I'll wait for a new long setup, or I'll just avoid that day.
Okay.
Likewise, if we don't have any clear draw on liquidity, I won't trade, a breakout. So I won't trade past the high of day or through the low of day, unless we have a previous high or low that we created during that day. So there's some mechanical filters for sure. Most of them are about just like where we are in a range. Just like simple stuff like longing in a discount and shorting in a premium tip.
Okay. So it's not really about the day. It's more about
it's
the
more just about
expansion.
the range in the market structure. Yeah. Like one thing I don't like to ever do is fade like what I call the daily profile. So for example, if I'm bullish on the day and I have an established low of day, I don't ever want to be trading back towards that. Even if there's a great retracement, like say for example, we have an unfilled gap we're targeting. I'm never going to trade back towards the low of day if I've established that as a low. I'll just wait to trade away from it from like a gap. But some days we don't get that, and we just I just don't trade them.
We have Mike Huddleston Burner in the chat. There's no way you created that YouTube channel, bro. Mike Huddleston Bird. Shit.
What are there any days that you skip?
No. I usually like that's the thing though with me is like most of my trading in general is like I optimize my systems for prop trading. So like
For sure.
Everything that I do is not necessarily just based on like I don't necessarily try to optimize expected value. I try to optimize like
Frequency, right?
Frequency of trades and win rate and back-to-back wins, and I would say like the having a low risk of ruin. That's really what I try to do for most of the.
Also like strictly optimal for trading prop. Like the number of times I've round tripped 3-hour trades and then been like, man, if I had trailing drawdown, this would be really bad, right? You got to choose the right prop firms for your strategy as well.
Yeah, 100%.
Statistically speaking, though, you're like a high win rate and a lower RR will get you more payouts with prop. That is the game. And then higher RR typically really favors compounding and growing a personal account. Obviously, if you can take a couple of large RR wins. I swing trade on my personal account. I rarely day trade for that reason.
That's cool. I never got into swing, so we'll definitely looking for that within the future for sure.
Swing trading is awesome because it's one of those things that you can kind of do to dynamically hedge your day trading. So if I'm trading, NASDAQ every single day, it doesn't really matter what direction we're trading, right? We're long, we're short, whatever. It protects against the variance of maybe a losing streak in day trading if you're clearly in a higher time frame buy model or something. Like for example, longs off the lows or shorts, a couple months ago to the lows were just a really easy way to hedge a shitty week of trading. It's just the market's tending in a direction over the long run. So
Because you seem like a smart guy, bro. You seem like a guy who had like a 4.0 GPA. That's the type of vibes you give me.
I was definitely a nerd. I don't know.
In other words, you're a nerd.
I was definitely nerdy for sure. Yeah.
Damn. That's a compliment though, bro.
Yeah, dude, for sure. I remember I was doing I remember I worked in consulting in Toronto when I graduated. So I went to Queen. You were from Montreal, and the majority of the kids I worked with were like business majors, commerce kids, and then I was like the the master's in engineering kid, and they were always like, "Yeah, this kid's gonna do the spreadsheets. This kid is gonna do all the Excel stuff. He's our
Yeah,
nerd."
we're gonna put that guy on the Excel
Yeah,
spreadsheet, bro. Oh
yeah.
my god.
So client would always like come to me and be like, "Oh, he's like, I heard you're the guy who's gonna do all the math and the spreadsheets." I'm like, "Yep, I got it."
Shit. Oh, well, what do you do in your free time?
These days, I have a dog. His name's Mango. Very very sweet dog. Right here, actually. Mango, come say hi. This is this Mango. Come here. Where are you going? Where about? This is my golden retriever.
Damn.
So he's super sweet. I take him out. I spend a lot of time with him, especially in the summers when the weather's nice. Because in the winter it's like awful. As you know, in Canada, it's like rain, cold, snow.
Yeah.
Other than that, like I spend a lot of time with my parents actually these days. So I recently moved back home because I was away for so long, and I haven't really seen them in like 10 years. So I'm gonna spend
Oh
some.
yeah.
Yeah, it's cool though. It's like my dad's in my Discord and stuff too, so it's like full circle, man. It's like funny.
Nah, you got your dad to trade too. Shit.
Dude, my dad is cooking, man. My dad made like
That smashes TP.
he made like 30K of profits on prop firm like last year in his first year.
Damn.
I was like, Dad, you're clearing me. His first year of trading.
Shit. Okay.
What about you? What do you do for fun?
I mean, I'm a pretty simple guy. I would say, like, for fun. I wouldn't say gym is for fun, but I like to play sports for sure for fun. So right now I am doing a little bit more boxing,
Oh, cool.
trying to get the reps in.
That's dope.
Boxing. I started doing more like tennis and paddle.
Oh,
Okay, I know, like
paddle is
I'm
fun.
hopping on the trend, I'm looking at TikTok and IG.
If
So
you guys want to see me whooping Trader Kane's ass in paddle, go to my Twitter. We went to Cape Town last year and we got super into it. So
oh yeah.
we were playing every day. Like me,
Yeah.
Trades, and Kane got like very competitive with paddle to the point where it was like every single day we were making bets on it. It was like
Yeah.
be at the court at this time.
Okay, damn.
It's so much fun though. Isn't it? It's a great sport.
Yeah, definitely. You like the thing is like all the individual sports are so hard. Like there's such a big skill gap, and you need to like understand a lot of things. Of course, it's fun until you face someone who's good at the individual sport, and then you understand like, oh my god, it's kind of boring. It's always like you always have to play against someone who's at your level or slightly below, because I'm telling you.
It's hard, man. It's actually it's a very hard sport. It's also like a full body workout because you're like sweating for 2 hours back and forth.
Yeah.
Pickleball. Have you played pickleball?
No, I never played that.
Pickleball is like badminton and table tennis. It's the only way to describe it.
I'm so bad at badminton, bro. I'm terrible.
It's because the
I don't know, like
birdie's hard to hit. Yeah.
you really need to be athletic to I'm gonna rage bait some people in the chat. But do you really need to be athletic for you to be good at pickleball or like badminton?
That's a bold thing. Most people think they're like easy sports. I agree with you. I think they're hard.
I don't know. It's like more technique than like being athletic. I'm good at anything that you got to be athletic, like run fast or jump high.
Oh yeah, same here, bro, for sure.
But for the rest, I'm telling you, like golfing. Oh my god,
I'm terrible at golf.
So bad. I can't. That I'm telling you, it's a different type of sport.
I also in the summer specifically, I know it's like very seasonal because we're in Canada, but I like to take my car to the track sometimes too. I do that in my free time. It's a good time. There's a couple.
Did you say sorry? I was responding to Tony.
Oh,
Tony
no, I said in the summer
is where it's at.
I like to take my car to the track. It's a really good time, actually. We can only do that in the summer.
Your car to the track?
Mm-hmm, yeah.
What's your car?
I have a Porsche, and I have like a track license that I got last year, so it's pretty cool. Yeah.
Oh, cool. Damn, that's cool.
Yeah, I
Yeah, I
take
was
like.
responding to the producer in the back. He's
Oh,
like, "Yeah, golf is where it's at." I was like, "Hell no,
yeah,
I don't agree with that.
I can't do golf.
Hell no."
That's my dream to have track days. Oh yeah, dude, track is so much fun. I got like the. I live in like BC in Vancouver, and there's one track in the Okanagan. If you guys know where that is, in interior BC, and I got a membership last year, and it's been so much fun. I've done like 20 track days on my car, completely gone through a set of tires. Yeah, good time.
Damn. So is the Porsche the best car in the game?
I got my dream car, honestly, so I'll say so because I'm biased. But yeah,
What is it?
I have a GT4 RS.
GT4 RS. Okay.
Yeah, it was between that and a GT3 RS. I drove both, and dude, the mid-engine is just phenomenal. It's a little bit lighter and it's a longer gear ratio and it's mid-engine. Oh, if you're ever in like Vancouver, bro, we'll take you to the track.
I don't think I'm gonna be there anytime soon, but I'll let you know.
4 5 hour flight for you, bro.
Is it?
Yeah.
Damn.
I also have a car out in Miami. If you're ever there, we can go to Miami. We can go to the track there.
Yeah, Miami. I'm in Miami.
Oh,
sometimes,
are you,
for sure.
you live in Miami now?
No, but I go there quite often for sure.
Okay. I have a place in Miami actually. My like business is set up there, so I go there, and my business partner is there actually as well. So I go there pretty regularly.
Nice. Who's your business partner?
His name is Jay. He's another trader.
Oh, okay.
Yeah, we do our like Discord and teaching together.
Okay,
But
cool.
I lived in Miami actually for like 6 months when I first quit my job, and
What do you think about Miami?
I love the weather there. I just didn't like the culture living there for like an extended period of time. But I got my visa. I'm a Canadian, so I needed my visa, so I had to be there for like 6 months.
How'd you get it?
I got an investor visa. It's like an E2 visa for Canadians. If you start a business in the States, for me, it was just I bought a couple Airbnbs, and because you have payroll employees, like someone who does your property management or whatever, you can qualify for a visa. Payroll employees, yeah. It's hard. It's really hard to get a visa as a Canadian, as you know. Right?
Yeah, I'm thinking about marrying someone.
If you purchase an Airbnb, like a piece of property, for example, like I did in Florida, it's actually quite easy to get like an investor visa.
Okay, that's good to know.
Yeah, it's actually really useful because the personal visas I like couldn't get. I tried for like a year, just couldn't get it.
Okay. All right, guys. Let's try to reach some more likes on the stream. You guys know I'm greedy on that. So 500 likes for the third like goal. So we're currently at 445. We're having a good time. I took a trade, ended up being a break-even trade, unfortunately. Trying to long from the 8 p.m. open, but that candle ended up being just a wick, unfortunately, not being able to go back towards that 4-hour high. We needed that retracement for some reason, and now it's breaking out again towards that high. I would say as soon as we're going to break above 6.9 here, definitely quite some chances of seeing that 4-hour high from that sweep here.
We ran that hourly low on YM, and we got a very nice reaction. Finally just broke that consolidate.
Yeah, right here. I see it. YM. I never traded YM actually.
So Nasdaq and the Dow are actually the most inversely correlated. So when you get SMT divergences, typically they're between YM and Dow more frequently than ES and Nasdaq actually. So a lot of people use the S&P and Nasdaq, for example. If you're just going to use two, it's actually better to use the Dow and Nasdaq.
Oh yeah, I didn't know that.
The ES is like the middle asset. If you look at like ES, Nasdaq, and YM, you'll typically see that if Nasdaq is going up and YM is going down, like they're moving in opposite directions, ES is somewhere in the middle. So then when you get these SMT formations, it's usually at the range low or high with YM and Nasdaq.
Someone asked, why does Afiz look so familiar? I agree. I feel like I saw him somewhere in real life.
I used to trade on another prop firm segment. Maybe that was it.
let's not get into that.
In another life, bro. In another life.
Yeah, stop this right there.
Maybe you saw me on YouTube or something. I have a YouTube channel.
God damn. Yeah, you look like a vlogger. Yeah, I agree. You look like someone on YouTube.
Maybe I should get into IRL content. My YouTube has 0 IRL content, like not one. You have a YouTube channel as well, right, Amos? Yeah, I think I'm subbed to you.
What did you say?
I'm subbed to you on YouTube, I believe.
Oh yeah, let's go. I'm gonna try to funnel you, bro.
Let's go.
Gonna hit you with that funnel.
Let's go.
Someone said bro looks like Hakimi on the Moroccan team.
Oh, that's a compliment.
I agree. Yeah, that's a compliment. You mog.
My cousin is Moroccan. He's adopted from Morocco, and his favorite player is Hakimi.
Yeah, cool.
You went to go see the quarterfinal game? Yeah, you went to go see the quarterfinal game this year in Dallas.
Oh yeah.
Oh.
Okay. All right. Let's run some giveaways, guys. We're definitely qualified to give you guys 3 accounts. So yeah, you guys qualified for 3 accounts, 100%. We're currently at 494, so 6 more likes, and at 600, I'm doing a 4th account giveaway. So come on, like the stream, also subscribe to the channel. So we're gonna start right now. Give me some inspiration, chat. You know what we do, every time we do the giveaways.
Yeah.
We do we do random words, and I ask them to give me like inspirations of words that are, I would say, like representative of the session that we've done together.
I see.
So,
okay.
Okay. I like that word.
Someone said nerd. Okay. All right. Fine. Fair. I'm taking it as an insult. It's a compliment.
It's absolutely a compliment.
Guys, just wait
definitely do
presents in this segment. You're gonna see. I'll completely nerd out with you guys when I take my trade.
Bro, the thing is, like, they used to call me nerd, but I think now you took the throne, bro.
Perfect, bro. I'm proud of it.
I think I got cooked.
Two-stage PSP. I saw someone put in the chat. It's a good one.
All right. First word, nerd. Come on, guys. So you can spam the word nerd in the chat right now to have the chance to win a 50K select account. So today we're going to be giving away 50K selects. So at 600.
50K selects best accounts. They're my favorite accounts.
Oh, yeah?
Yeah.
Let's go. I just requested actually a $11,700 payout like 2 days ago.
I requested a max payout last week of July with my selects.
Nice.
So man,
I need to go for that max.
Yeah, I got approved in like 5 minutes. Tradeify is awesome. Yeah, it wasn't a max. I didn't know the payout cap was 3,000. I thought it was 2,000. So I only requested 2,000, and I found out after I requested, I'm like, wait, it was 3,000. I had no idea.
It's actually 3.
Yeah.
Probably, I think it's the best in the game currently.
It is the best.
50K select is definitely the best in price currently with all the other firms.
With $1,000 more payout cap, yeah,
a bigger payout cap. So like they have the bigger price, the better price, and the bigger payout cap. So the only thing is the consistency, but I would say the consistency for you to pay less, I would definitely take that 40% consistency, 100%.
Absolutely, the 40% consistency is also offset by if you bundle 5 together, bro. Like it's actually I've done the math. The expectancy.
I forgot.
The expectancy on the 50K select, even with the 40% consistency, just make sure you're not getting one extremely large day in your trading. Is probably the highest in the space for select accounts, just because it has a $3,000 payout cap.
Yeah, I forgot the bundle, 5% off for the bundle.
Yep. It makes a small difference, but it does make a difference.
Yeah. So let's select the first winner. Congrats, Dan B8532. Congrats, brother. You won a 50K select account. Make sure to have your email in your YouTube description and also to type right now in the chat so we know you're here. Now let's do the second word. Let's do, okay, give me some more inspiration, guys. Come on. Give me some inspiration. I saw some good words, but I forgot. I actually forgot. Okay. I know. That summarizes it like a pretty good part of the segment.
Oh yeah, I like that. SMT. Good one.
The word is SMT. So I was definitely getting lost on those SMT explanations at a certain point, going between YM, ES, and NQ, but you know, Afiz is better at doing that than me, so he's gonna, hopefully next time he's gonna be able to share his screen and
yeah,
it's gonna be faster.
I'll be able to explain it a lot better with my skill. It's not too complex.
It might be complex because it's 8 p.m.
Maybe.
It might start to be complex, yeah.
Maybe. That's true. I could do a better job explaining it for sure. I'm up for the challenge.
Let's select the winner right now. Wait. Oh shit, okay, I did not even see it. Congrats, Akshar7819. Make sure to have your email in your YouTube description and to type in the chat right now so we know you're here. So you want a 50K select account. Now, what is it like? 541. Guys, I told you it's 600 for the last. 600 for the last.
We choose the winner based on the word that you're seeing in the chat. So it's a random name generator and you just type a word in the chat and you get picked.
Yeah.
Simple. You're going to see the low of Deimos might get formed from a two-stage PSP on the 4-hour chart with YM. You'll see right now it's decoupled, so YM's trading lower, Nasdaq's trading higher. So it's quite good actually for a bullish.
So you sometimes you do trade the overnight session. So the next word is badminton, by the way, guys.
Yeah, I'll trade the overnight session if we open up into like a 4-hour gap or something. Like last night's a really good example of a session I would trade during Asia. It's because the daily chart gives us a really good framework with the Asia Open. If you look at the daily chart, we formed that SMT at the previous day low in Asia, and then we get that change of state delivery very early in the day, so you can trade the overnight session.
Great. All right, let's select the winner right now. Congrats, Crocker's Trading. Congrats, brother. You won a 50K select. It's already time for us to say goodbye. Guys, I told you guys it was 600 for the fourth account.
We'll get it next time. We'll definitely get it next time.
Yeah, we're gonna get it next time. So for today, it's I don't wanna see the rug allegation right there. you guys were not able to pick that up to 600, all right? And I pressed. So it was a blessing to have you guys on the stream today. Appreciate you, Afiz. Appreciate you
Absolutely.
for
thank you so much
for giving us such golden nuggets here today with your model. hopefully we'll all be able to trade your model within the next few weeks when where you're gonna share your screen. So
For sure,
yeah,
bro. Next time I'll be able to share my screen. I'll maybe just go through one simple component. Maybe we'll catch a trade. All that good
for
stuff.
sure. So again, appreciate you guys so much, and I see you guys tomorrow at the same exact time. Peace
Awesome,
out.
guys. Thanks. Peace.